Welcome to The Intentional Investor with Matt Zeigler, where he and his guests explore the intersection of investing and life, portfolio and purpose. Nothing in this podcast is investment advice. Nothing in this podcast is advising you to buy or sell any security or to do anything with your money. Seriously, you should only act on investment advice from someone you know and who knows your unique situation. We are not that person. Matt Zeigler is a managing director at Sunpoint Investments, and the opinions expressed on this show do not necessarily reflect the opinions of Sunpoint Investments or of Second Foundation Partners. Securities discussed in the podcast may be holdings of Sunpoint Investments.
Welcome to The Intentional Investor, right here, Epsilon Theory YouTube channel. Like, comment, subscribe, all the things below. I'm your host, Matt Zeigler, joined today. I'm apologizing in advance. I have to draw this out. I have to build a bridge, if you will. An original Double D, but I can confirm he's not the Double D from Boogie Nights. And if you're into time horizon-based movie humor, even if a broken Clockwork Orange is still right and a bit too long, if I'm being honest, 2 times a day, this is a different type of night of the droogs that we're about to have here. And no, as an investor, he's not long stars, not long wars, and I can confirm he loves both earth and peace, which might make him the Druish princess of sorts that we know him as. But he's a rocker. I see those guitars in the background. You can't hide those. He's in the States. He's from the States. So a D.D. Ramone, I know he's a blues guitar guy, maybe D.D. King, and he's a sports guy too. I know he loves his football. In the midnight hour, this guest cried, Kenny, more. I love that story. We'll get to that. It's not Drew Brees. It's not Drew Bledsoe. Not even Drew Spence. That's a deep reference. I don't know if you're going to get that one or not. You can look it up later. We need another Chelsea legend for this man. Ladies and gentlemen, longest intro ever, but I finally got to it. It's the DJ Drogba of financial management, willing to hang out for days while the defenders defend just to make his points on the counterattack. Albert Bridges' own Drew Dickson. Drew, welcome to the show.
Oh, Matt, that definitely was the best intro I've ever had, and I will be the DDA Drogba of financial markets all day long. Great to connect with you and speak with you. I've been looking very forward to this.
I'm excited to have this conversation. The problem here is clearly between music, psychology, sports, business writing, and all these things. I have too many things to ask you about, but we're going to keep this on track. I'm still beating myself up. I didn't ask Grant Williams a single CNC Music Factory question. Like, blew my mind when we get into the call that I missed that one or forgot to ask it. I had it in my head before. But I want to start off here with you. The writing, the networking that comes from the writing. I got to know this question. Drew, as a kid, are you reading books? You like the Hardy Boys kid, comic books? What are you reading as a kid for fun, if anything?
Yeah, I was an Isaac Asimov kid as a little guy.
This makes so much sense.
But as you'll find out in our conversation, I became the world's least focused student throughout junior high and high school, and even at Purdue until later. And toward the very end. So a lot of evolution for me in terms of reaching that potential. But I was originally into Isaac Asimov and science fiction writers early on.
What was the draw? Why? Like, did mom or dad put you on? How did you discover it?
Mom or dad were very, very free range, and I appreciate that. I think something that's kind of lost now. It's even. We try to be similar, but it's difficult for parents these days. But there was very little direction. Just it's whatever interests you. You went off and did. If you want to go build a fort in the middle of the woods and disappear all day, you do that. If you want to go to Follett's bookstore down at the Purdue Service Center and buy an Isaac Asimov book with money you stole from your dad, you do that. So, and you do it on your own.
Yeah.
Yeah.
What did mom and dad do? Like, what was the vocation? What's the household like? Brothers, sisters?
I have 2 little brothers. Well, little. They're both as tall as I am, and one could literally beat the living daylights out of me. I'm just for the record, I'm 6'6", 275, and I have a brother who makes me look like mincemeat. I was tough on him until one episode in college. I'm a couple years older, where he decided to let all my friends know that he was actually the baddest of all of us. And so he got me good. And that's the last time I've crossed him. We don't fight anymore.
So what did mom and dad do? What
Okay,
were the
so mom took
professions?
care of us, and a lot of sort of sideline projects having to do with families and support. My father, growing up, he was a county seat lawyer in Tippecanoe County, Indiana, which is where we're from. He originally is from Hobart, Indiana, which is in the north, up near Chicago in the region. My mom is from southern Indiana, Milan, Terre Haute, and they met at Purdue. And dad was the first of his ancestors to go to university, to college, and he did it well. After graduating from Purdue, he went to IU Law School, which was based in Indianapolis. They have campuses in Bloomington and in Indianapolis. He has a law degree and started practicing law. And then by the time I'm aware of all this, he's running an office with a couple of partners in Lafayette, Indiana. That was what he was on. And he didn't push me to follow that career. I naturally, at the outset, which I'll describe, I naturally thought that's what I would do too. But he never once, he did one, I'll tell you one story when we get to it, but he never once tried to push me one way or the other. Hey, whatever you want to do, you do. That was kind of, I think that was the way a lot of us grew up, in that time period.
Without the push from mom or dad, and just like as a kid, was there, I'm really interested in this lately so I'm thinking about a lot for myself. The awareness of someday I have to get a job, someday I have to be something, and starting to fumble with those professional realities, let alone maybe aspirations. But was there dread or panic or some evolution of that you went through?
There was never any dread or panic about what am I going to do someday. And I think I hear a lot of people talking about follow your passion or find a passion or don't. And it depends on what you do. If you do something professional or you do something blue collar and sort of deep dive hard work, sometimes things just happen. I was really lucky in that I was just always, from an early age, fascinated, weirdly, by financial markets. And that sort of started in late junior high school and through high school. Started investment clubs to do things. And then it really blossomed in my late teens. I'm dating myself, but I mean, we went through such experiences, even in college. This was in '87 market crash times. And, I can remember those days like they were yesterday. I've always been very geeky about the stock market, about the psychology affecting the stock market, particularly. And I guess I just leaned that way. And when I got out of college, I didn't go straight into my current career. I kind of took a little sideline in a different part of finance, but then eventually went back to graduate school and pulled it all together and got going. So I don't know. Yeah. I don't know why. I don't know why that would turn out to be that case. I wasn't following the footsteps of my father or anyone I knew. I was just fascinated by it all.
So what about first financial thing you bought? It's one thing to be aware of it, like it's the box scores in the newspaper or something. Like what's the first thing you physically bought? Yeah.
The first thing I physically bought was some AT&T stock I bought which would have been my senior year in college. In high school. With an account that I had to share with my dad. It was one of those Enigma accounts, and it was at a local firm. Back in the days when it was $60 commissions, and I think I bought $400 worth of stock. So it was a very high expense ratio, Matt, for this first trade. And then I went off to Purdue. I started writing a newsletter. I spent all my time in the Cranbrook Library, just doing research and reading old stuff. And started in like another one of these investment club things where none of us had any money. We all worked a lot, and maybe we had 8 of us with $100 each. Okay, that's enough to start a little club. Let's do this. Let's do that.
What year is this? I'm sorry to date you,
So I
but I
started
need to date
college
you.
in 86. So this is 87, or 88,
Okay.
89. And like the 87 experience was, it was just, it's funny. I've been through that. I've obviously been through the tech bubble, been through the GFC, and you have those experiences. I think that your attitude toward things is very different than someone who maybe started doing things in 2011 and is now 13 years into it. And that could be good or bad, right? Sometimes if you wanted to own a lot of the meme stocks, a lot of the things that have been high flying the last 5 or 6 years, you could not have had those experiences knowing what the real world could be like. But it's not my style. My style is much more a belief that the markets broadly get things right. There might be rare cases where we can find individual securities where there's some mispricing. We try to identify stuff where we think the market has underreacted to some big change in business model, or perhaps overreacted to bad news in the shorter term, and we can take advantage of it if we have conviction in the longer term. But then we're very cognizant of the fact that we could get things wrong too. We're trying to bat 600, 650. That's a very high batting average in this game, which means we're trying to get 2 out of 3 right. We're also trying to get 1 out of 3 wrong. Have a culture at your firm with an analyst or 2 that you hire, or between you and your investors, where you almost get as much joy out of finding the mistakes you've made as you do about finding the winners. Because if you can identify those early and have a culture where it's okay and you can be unbiased about finding them, you're sort of shedding that confirmation bias we all have. You're shedding that anchoring that we all have. And you can catch those losers early. It's that Charlie Ellis loser scheme thing, the focus on avoiding the big losers as much as you do finding the big winners. Well, that's the recipe for success too. Now I have to let the dog out of the front door.
Yeah, don't worry. Go ahead.
Keep it running. It's okay.
Don't worry.
Right.
I know that sound too. My dog sometimes pushes the door to my office area closed and then just sits there doing this, looking at me.
Yeah, that's what she was doing, just driving me nuts. Anyway,
what I want to rewind the clock a second though. On 86, 87, 89, the beginning of school with the investor club, you go through the 87 crash. Are you writing, is there market commentary letters from you to the college investment club friends from this period? How did you
I have old
this?
letters. I wrote these, I put together a newsletter. I called it the Prime Timer. I guess I started doing it in 86 and working through 87. And one thing, market historians will know this, but the market was acting very wobbly even before October that year. It peaked, I'm going to get this date wrong, but on August 25th, August 26th of 1987. And it sold off reasonably even before the big crash that we had. And, we didn't have, there were computers, but they're all like Purdue Lab, and you couldn't save stuff on it. So I, with my legal pad and my calculator, I'm writing down stock price closes, and I still have the yellow legal pads. The week before the crash, you could see how things were moving and selling off, and you could do these comparisons to what happened in 1929 and see a lot of, and it's all random numerology stuff at the end of the day, but it was fascinating. In 29, the stock market peaked on September 3rd, and by the time Black Monday and Tuesday came, it was a certain number of days from that peak to the crash. Exactly the same number of days in 1987, between 25 and 19, August 25 and October 19. So there were some similarities. Obviously, after the crash happened, the similarities disappeared, but that turned out to be a different thing, not what we had in 1929. But I love that history, and I loved going into the library and pulling up the microfiche. Another boomer thing to do is go to the library and pull up old newspaper articles from the days after the crash in 1929 and see what people were saying. And that meant sticking this microfiche into a reader and twisting it around and scrolling through newspapers. And and that's how you got information. Things are very different these days, but, I, I did that. And in the meantime, Purdue had a original copy of, or the credit library, original copy of, Security Analysis by Graham and Dodd. I had that. I think I had the thing checked out the whole year. Didn't let anybody else have it. And I was just very much into that kind of thing. And meanwhile, I'm reading articles about these upstart sort of heretical economists. A few articles about Schiller, but most of the articles were about Richard Thaler, who at the time was at Cornell, poking holes in the efficient market theory. And meanwhile, I'm also a big fan of Eugene Fama, who is this paragon of intellectual, empirical research, trying to understand how markets work. And so both sides of this argument interested me from the time I was 18, 19 years old. So, but Matt, as I was starting to say, I didn't really know what I was doing. I was winding back to high school. I kind of got through. I wasn't like these kids now have to be to get into a good college. I wasn't getting any 4.0s in college, in high school. I was barely getting by playing a lot of basketball. That's all I did. I focused on hoops, and I wasn't a good enough player to play Division I basketball. I was all right. My claim to fame for being both a geek and an athlete, or mathlete, as Kruger calls them. I was a captain of the basketball team and president of my math club.
That's a combo. That's a combo.
How about that? And, but I wasn't good enough to go to Purdue and play basketball. So I had some Division II schools you've never heard of in Indiana that wanted me to come, and I was going to go. And at the last minute, literally in August, I said, no, actually, I think I'll just go to Purdue. And you could do that back then. You could just 2 weeks before school started say, actually, I want to go.
I'm going to show up. It'll be fine.
Yeah, and
you'll have a place for me. Yeah.
Yeah. And that was where now I'm dealing with my twins who are 17, and the whole college process is much more involved than what it used to be. But so I started off at Purdue, and I started majoring in political science. Hey, I'll be a lawyer like my dad. And I had a few professors I liked, but broadly, Matt, I didn't go to as much class as I should have gone to. I wasn't as serious about the academics. Part of that was forced on me, just due to some circumstances. I needed to make a lot of money, or not a lot of money. I needed to make enough money to pay for things. So I worked a lot of different jobs, a lot of jobs that,
the investment club wasn't monetizing the academic path.
That was not the main job. I did, you name it, I did it all the way through college to just pay for things. And, but during one of those, I think my freshman year, I'm in my dad's law office downtown, and he knew I liked this financial stuff. He didn't know much about it, but I'm in the conference room doing some homework, and I come into my dad's office. He goes, my law partner, Bob, he goes, he told me he's bought these things. It's not buying the stock, it's buying the rights to buy the stock. And I said, what? He goes, yeah, I think they're called options. And I was like, whoa, that sounds fascinating. So I went and bought a copy of the Wall Street Journal. I took it back to the conference room, and I'm scouring through this. And he told me the names of the stocks, and I got the strike prices. I'm drawing out, no training, nothing. And I effectively started drawing out these German Connie binomial trees. I didn't know that's what I was doing, but
you incepted it.
I immersed in this sort of 2 hours of research. Well, that price looks good. He overpaid for that. Stock's not volatile enough for that. Or that's too volatile, or blah, blah, blah. And I walked in my dad's office and said, Dad, the stuff that Bob bought, this one looks really cool. I think he overpaid for this one. And he looked at me, he said, and why are you majoring in political science? And I said, yeah. Meanwhile, I'm writing the stock market newsletter and stuff. So I think that semester I actually dropped out of school for a full semester to work a harvest, but again, to make some money. And then when I came back, I started off, almost kind of starting over in the management school, Prentice School of Management, focusing on finance and management.
did you become a more focused student? I mean, you said you were the world's
Not yet,
least
not
focused student
yet.
up to that point. Okay.
Not yet. I did in my finance courses. So Charlene Sullivan, who was one of the best professors I had there, and Bill Craig Call and a few others, I get A's in those classes. I love those classes. But if it was a biology class or something that didn't interest me, I'd show up for the exam. That would be the extent of it. And it was frustrating to some of my good friends today, even still, that was the Drew Dickson in college, but that's who I was. I wasn't really, if it was something I enjoyed, I got all over it, but I was sort of, less interested in other things. And also at one point working 3 or 4 jobs. I'm coaching basketball at the high school, at the same middle school I went to. I'm working at a pizza place, or I'm working at a grain elevator or for the state highway, picking up dead animals on Monday mornings. I'm doing all sorts of stuff to make ends meet. And school kind of became a sideline. Unless it was finance courses, then I was all over it. So
undergrad first, then straight to grad school?
No, undergrad first. I'm still at Purdue then. I had worked all these menial jobs my freshman, sophomore, junior year, but then when I was after my sophomore year, I got an internship working for the Indiana State Auditor. So that was just basically data entry. And that's, again, dating myself. That's back before Excel. That was Lotus 1, 2, 3. And I became a master of the number pad. It's one of my party tricks, even to this day.
Put the blindfold on, key in.
I can do it all. And the following summer, I interned at Indiana National Bank as a credit analyst, and met some great guys there too. And so for me, this is not someone with aspirations to go to New York. Certainly there weren't high school aspirations to try to get to an Ivy League school or anything like that. It was just not a path that people took from where I was from. And I thought, well, I'd love to work in Chicago or Indianapolis. Those were the two. I mean, it's funny to call Indianapolis a big city, but if you're from rural Tippecanoe County, Indianapolis is the big city, and Chicago is the massive city. New York wasn't even a question. And remembering that I'm loving the stock market and the psychology, but I also just I didn't have like any doors to go work for some investment bank. I wasn't really sure how that even worked. I did have an offer to work for a couple of the banks in Indianapolis, in the credit departments at Bank One at Wachovia. And Bank One, it wasn't even called that then. It was called Indiana National Bank. I had an offer from what was then called Anderson Consulting, then subsequently called Accenture, to work up in Chicago. And that was exciting. I'd been to Chicago a lot, a Cub fan growing up. I'd make my parents take me to the Chicago Board of Options Exchange and the Board of Trade and get pictures out front of them and pretend like I'm some option guy. And then as happens, well, I should rewind a bit, Matt, but my father, remember I mentioned he was a local attorney. When I was a freshman at Purdue, out of the blue, he was nominated to join the Indiana State Supreme Court, which was a wonderful honor.
Wow.
For him. And so mom and dad moved down to Indy. And my 2 little brothers as well. But I was already at Purdue. And my dad was only just retired from that role. 6 or 7 years ago, at the age of 75, we had forced retirement in the state of Indiana. He was the longest serving Supreme Court justice in the history of the state since 1816. And it was a great career for him. At the outset, though, it was a bit of a shocker because he's gone from this sort of, well, what you would call an upper middle class existence in West Lafayette, might be called middle class anywhere else, but he's making between $75,000 and $150,000 a year as an attorney, takes this job offer, and his salary gets cut down to $62,500 because that's what a state Supreme Court justice made in 1986.
Welcome to public service.
Welcome to public service. And by the way, good luck getting your kids through college.
Yeah.
Because that was right when I was starting, and my little brother, or my middle brother would be there a year later. Thus all the jobs I had to do and to get through college. My parents couldn't really afford to do that. So, I wouldn't trade any of that experience for a second, but I also wouldn't force my kids to go through the same thing either. So it's kind of the old conundrum of what you do with your own kids compared to how you did it yourself.
It's wild to think about those decisions. Was that expressed to you when you were making the college decision? Like, dad's about to have a big pay cut, but you can do this.
We didn't know.
Favorite?
We didn't know. I started in September, and he was nominated to join the court in January of my freshman year. That's when all that happened. And he couldn't turn that down. It was a wonderful role, and his contributions to the state were amazing. And the reaction he's had over his career, he's been a wonderful impact on the state. And my mom, meanwhile, is working with the families of judicial families. Sorry for the redundancy, just to help them, because sometimes there could be some high pressure stuff that happens, particularly some of the lower courts and some of the pressure on the judges from the community and things like that. So,
what do you mean by that? You got to explain that to me. Like, she was helping.
If you're a judge and you're going to put someone in jail and it's someone who's not happy about it, you got to worry about your kids at school, especially, and it's that kind of stuff.
And your mom would help with that.
Yeah, she set up like organizations just supporting families. I think she called it the Judicial Family Institute. Ended up being a nationwide sort of thing. So, yeah, so she was busy the whole time through. But my younger brothers graduated from a different high school than I did. They graduated down in Minneapolis at Carmel High School, but I basically stayed up in West Lafayette through my senior year in college. So back to do I go to Indy or do I go to Chicago choice? My dad says, "Hey, there's a guy here that is clerking for our court administrator. He's an older fella. He had his whole career up in New York, and now he's gone back to law school at IU at the age of 40-something. His name's Frank Capozza, and I told him about you, and he'd love to meet you, and I think you'd love to meet him." I said, "Well, Dad, next time I'm down in Indy, I'll meet old Frank." So I get down to Indianapolis, I meet this guy, Frank, and he's as New York as you like. He had worked on the New York Mercantile Exchange, one of the original traders, and had kind of retired and decided to go back to law school as an intellectual pursuit, and was doing consulting work for a group down in Atlanta that did a lot of hedge business in the corn, beans, and wheat grain trade, working with grain elevators in the Midwest, hedging their basis exposure, their price commitments. But at the time, the New York Mercantile Exchange was really starting to take off. They had the heating oil contract in 1978, and subsequently the gasoline and crude oil contracts were in, and all of a sudden you had the whole barrel, so people could hedge the whole barrel. And hedging was starting to take off, and my boss, the one who became my boss, was trying to apply some of these same basis trading principles in grain trading into trading the oil complex for hedgers. And so I fly down with Frank, Frank's doing some consulting for this fella. And I fly down to Atlanta, where I'd never been. And I meet this guy, old school. I mean, he's got the most wonderful Southern name you've ever heard, Ashmead Forrester Pringle III. And old Ashmead says, "Drew, I want you to come work here." And I couldn't say no. So I moved down to Atlanta, Georgia, hopped in my car and drove south. And that wasn't on that was just happenstance. That wasn't on the list. That wasn't one of the goals, but I head down there, and I got down to Atlanta in the early 90s, which was the perfect time to be there if you like baseball at all, because that's when the Braves went from worst to first between 89 and 90. And my boss had 4 tickets behind the Braves dugout for the next 7 years. And I went to, I must have been, this is the old Fulton County Stadium.
Yeah.
I must have been to 100 games, all the NLCS, all the World Series. I was at every one of them, the home games.
That's a run.
And yeah, that was a good run. And I got to meet like Tommy Clavin and John Smoltz and Steve Avery. I meet him at the Raccoon Lodge in Buckhead after the games. It was just incredible. Crazy time.
So this is after undergrad still? Like this is pre?
Yeah, this is just after undergrad. I graduated, moved down to Atlanta. I'm not getting into the stock market. Other than investing personally, I'm focusing on the commodity markets. It's finance, it's markets. I'm still reading everything I can about the behavioral aspect of investing, but it's kind of a detour. But it was an exciting one. Atlanta was a great town, a fun place to be, great sports town. And if you're from any small town in the Southeast, Atlanta is their New York. Everyone comes, very young, very vibrant. And I had a wonderful time and ended up meeting my wife there, who wasn't from Atlanta. She was actually Italian, visiting a friend of hers in Atlanta, but we met, and that's how I met my wife. We ended up, I'm getting ahead of myself, but so Atlanta was great.
How do you meet your wife? She had a Braves game. What's she doing?
No, I took her to a few Braves games.
Oh, sure.
My wife's parents were expatriates in Africa. They're both Italians. And so she was actually living in Ethiopia, born in Yemen, and moved every 2 years, Tanzania, Zambia, Eritrea, Kenya. They're all over the place. So she's an African girl, but really Italian.
Yeah.
Grew up down there. And one of her friends at the American school in Zambia was this American girl whose father, well, they would say worked for the State Department, quote unquote, which meant they were in the CIA. And they became good friends. And they say good friends. And so this other girl, her name is Liz, she ended up going to, or returning to the States, going to college, University of Georgia, living in Atlanta. I meet her and she says to me, we're friends. She says, hey, my friend Lorella, my wife's name, is coming to visit me. But I can't get off work. Can you, after the markets closed, because the New York Market House closed at, the Market Exchange closed at 9, closed at 10 after 3. So can you pick her up and take her to Phipps Plaza, which was the brand new mall at the time in North Atlanta in Buckhead? I said, yeah, sure. So that's how I met my wife. I met her, picking her up, taking her to the mall.
It's a good thing you got out of work early.
Yeah, exactly.
Banker's hours, saving the world here.
Yeah, exactly.
So how long do you end up in Atlanta? How long do you stay for? What's the end of Atlanta look like? What gets you out of Atlanta?
I was in Atlanta for almost 7 years. I knew I wanted to go back to business. By then I'd kind of grown up a bit. I talked about how poor of a student I was in life. I still wasn't that great in college, as I mentioned. I'm not kidding. I think I got a 3.5 at Purdue, or in high school, maybe a 3.4 at Purdue. I barely, and I might get a D in the class, retake it. It was literally, I was a terrible student. But I'm really fascinated by this more academic side of finance. And so I wanted to go to business school. Meanwhile, Richard Thaler had joined the faculty at the University of Chicago at the suggestion of Eugene Fama, his arch enemy. And that was the wonderful thing about it. And between Dick Thaler and Gene Fama, and my father separately, I learned a lot about civility. My dad on the Supreme Court, and there'd be people, it didn't matter what your politics were. It didn't matter if someone's in the dissent and someone's in the majority. You can have a big battle over something, and then they'd all go to lunch as friends. And I'd see the same thing, and I loved that civility. And I saw the same thing with Richard Thaler and Gene Fama. They would do major battle at PhD conferences and about the way finance work, then they go play tennis or go play golf together, and they still do. Anyway, I wanted to join that. I wanted to get close to Chicago at that stage of my career. I need to let the dog back in, Matt.
Yeah, I know this drill. I know this drill too well.
Why? So I applied to the University of Chicago, but I had an offer to go work in project finance. I was really mostly interested in international markets. Like I was fascinated by what was happening overseas. And I've got this Italian wife who doesn't mind moving every 2 years. I was like, you know what? Let's go do this finance gig. And I got an offer to work out in Korea. This is right when the East Asian crisis was starting to unfold, going from miracle to crisis. So I was out there. This is 1996 or 7. And I was scheduled to start school in September, graduate school. And so I was out there until the summer. And it was an incredible experience. And it was perfectly timed, the exit, or luckily, really. And so I got some international experience even before I went to University of Chicago. But I get into Chicago, and all of a sudden, the light just came on.
No longer world's worst student, least focused.
I very quickly became not the world's worst student. I loved every minute of it. I did it pretty late in life. It took 6 or 7 years between between undergrad and graduate school. So I'm almost 30 years old at the time. And there's a few guys older than me, but I think the average age was probably 26. But not only did I meet a bunch of great people and have a bunch of new friends, many of whom are still extremely close to this day. A couple in last week that spent the weekend we all met in Chicago. It's been 25 years now since we graduated. But I got to meet really smart people. Aside from all the stuff with Thaler and Fama and Merton Miller, who was alive at the time, all that experience was, beginning to study. At the time, Mert is the only one that already had a Nobel Prize. But of course, I would take his course.
Yeah.
And you had to be a brainiac to even get into Fama's PhD courses. I barely got in. And if you took Fama's PhD courses, you could take Thaler's PhD courses. So I was able to take Dick's courses on behavioral finance. He also had an organizational decision-making course, which was for the lowly MBAs. I took that too. And I was just very much drawn to the way he looked at the world. And also intrigued and fascinated by Fama's rigor and his intellect. He's one of the smartest guys I've met. And the fascinating thing about him is he's a French majored in French literature, very unknown. This guy is a polymath. He can focus on whatever he wants to focus on. He chose at the age of 24 to define the term efficient markets in his PhD thesis. As I mentioned, he was instrumental in getting Thaler to come to Chicago to have the battle there in Chicago. So we had everybody there. It was the whole empiricals / efficient side of finance, and then on the behavioral side, there were a lot of others, Nick Barberis, just Thaler acolytes that were having the battle. And to me, I'd say this is game on. I absolutely loved that, and stayed focused on it. And it was during the tech bubble. So of course I ended up getting to spend a lot of time with Dick because he and I did these little projects, studying the behavior of a lot of these bubble-like looking things. So we became reasonably closer than a typical sort of professor-student relationship. I got to do some, like I mentioned, some research assistant kind of work for him. But as he'll say to this day, I was his almost PhD. I wasn't smart enough to be like some of these other guys, like Tuomo Voltinaho or and a whole host of them.
The books and the
Chris
papers
Malloy.
are all out there. Yeah.
Yeah,
They're out there.
Chris, who I became friends with, Chris Malloy. I think he's the professor now at Yale or Harvard, or maybe he's working for another hedge fund. All these guys, they're next level brains.
Yeah, right.
One of this, but even at the business school, we had some of those kids. One of my closest friends, who we did our research papers together, the ones we submitted to Fama and Thaler. Craig Dawson, he's just as smart as you like. And you hang out with people like that. He's now running, I think, Pimco's entire EMEA business. But if you start spending time with people like that, it does something to you. Maybe it's through osmosis, or maybe you just start realizing potential. But before you knew it, I was feeling like I was starting to get things and understand the world, and feeling pretty confident, and very intrigued and interested in all this stuff, enough to be dangerous. And like I mentioned, Thaler recognized that. He wasn't going to give me credit saying that I was smart enough to get into the PhD program at Chicago, but he just said almost. And Cliff asked us at AQR, I used to ask me, "Are you sure you're not one of us?" Because I would really be interested in the quantity side of things. No, I'm not one of you. I'm just intrigued by all this.
I'm just an almost. Just an almost.
I was able to not sound completely stupid when I have some of these conversations. And I love this stuff. I'm fascinated by it. I don't know if I will ever not be fascinated by how markets work. And so that was the evolution for me from an educational standpoint.
So what happens so graduate school comes, you graduate, that's right into a job?
In the middle of that, I knew I wanted to do investment management.
Sure.
Me and a couple friends who are still friends and now very successful in their own right. We ran the investment management group at the University of Chicago. One of them has his own group based in Boston called Caledine. The other one, she's a rocking the world as an OCIO for Cambridge. And I wanted to work in international because I've just been back from Korea. My wife's Italian. I want to get overseas and I want to pick stocks. Yeah. And back then you didn't have the hedge funds recruiting at Chicago yet. This was more just the big guys, and of the big guys.
What year is this?
This is in 99. Well, 98 for my internship.
All right. So the bubble has not officially burst yet.
No. I'll get to that.
Oh boy.
And it's 98. T. Rowe Price, Wellington, Putnam, and Fidelity were the four groups that came to the University of Chicago to recruit. And of the schools that Fidelity went to, it was Chicago, Wharton, MIT, Harvard. I'm missing one, maybe Stanford. And I pushed, and I think what got me the internship was I wanted to go to Hong Kong. We have 3 international offices at Fidelity. There's one in Tokyo, one in Hong Kong, and one in London. And the Tokyo office, you really needed to speak Japanese, which I don't. Less so the Hong Kong office, because they just had the handover. It's still very English. And also there's so many different languages, so many different countries that most of the way that everyone's second language is how you communicate, which is English. So if Malaysians are going to invest in Taiwan, or Cambodians are going to invest in Indonesia, well, let's all speak English to do that. So I could do that. I could barely speak English. I can do this. So I spent the summer out in Hong Kong, and was assigned the sectors. And that's how we do things at Fido. You just baptism by fire. Here's the list of stocks. Go cover them. Put together an investment report. and learn what you can. You really have to really sort of put your wheels to the fire there, or your feet to the fire, and wheels to the road, feet to the fire. So I'm out in Hong Kong. I had a baby, my first baby at University of Chicago. So I got this 1-year-old. We're living out in Hong Kong for the summer. He's not even 1 yet. He's literally 6 months old. And at the end of the summer, my boss, or not actually, no, this was at the time portfolio manager in Hong Kong, who had also gone to University of Chicago, super bright guy, rock star at Fidelity. His name was Shigeki Makino. And Shigeki says, they've given me an offer to return to Hong Kong full time after my second year. Oh, this is cool. But I already felt a little bit like, because it's mostly retail money. We have some institutional business at the time. Most of it was retail, and the investment was more of a macro one. There's some American guys saying, hey, I want to have some money in Asia. Let me just buy the Pacific Basin Fund. And so the flows were driven by that rather than like necessarily pure stock picking. So I didn't like that aspect of it. Meanwhile, the London office was starting to take off because we were just getting ready to go from Deutschmarks and Lira to the euro. And you can see this equity culture start to develop. And back to my portfolio manager buddy who had gone to Chicago, he said, Drew, you don't want to work here. You need to work in London office. I'm like, Shaq, really? I mean, he goes, yeah, no, you should. Okay. So I go interview in London, which actually worked out for my wife because she had a lot of family in Florence. It's more of a halfway house
closer. Yeah.
Being overseas. And so I fly to London, I interview, I do get the offer. I go back, finish my second year of school. And I worked with Fidelity, doing these projects because, it's that fascinating time in the market. This is, 98, 99, the bubbles aren't not in the bubble yet. It's starting to take off. I moved to London. We get settled. They assigned me, the first group was defense and aerospace stocks. So this is BAE Systems and Thales, and it's called Airbus. It used to be called Aerospatiale. Then it was called the ADS. So I'm getting to meet all these defense and aerospace companies, a lot of suppliers, Carlton Smiths. And very quickly, they put me on tech, European technology, so software and services. And that was right when things were starting to go off. So I got to be off, feet on the ground, and the access you get at Fidelity, maybe it's a little lower than it used to be, but it was, you got whatever you wanted back in the day. And so I would get to meet with the CEOs of every company we invested in, because we always buy a big chunk or not. And really have my feet on the ground there for that whole experience, which was, again, like in '87, when I'm in college in the markets law, being an investor and involved in a real way when the tech bubble popped. These things are going to impact my career. These things are going to impact my psychology forever. And that's, I think, a good thing, but sometimes it keeps you out of good things. So
what's the experience like on the other side? Are you still there? Are you still in that seat covering those companies when pop?
Yeah, I was still at Fidelity covering tech stocks when they popped. And some of it you anticipated, or you thought they were overpriced, you don't know. But some things you did, okay, what's the plan here? And as I've been in my career since, I'm a big fan of just trying to stay as objective as you can about all of this stuff. And I know you've probably you have had guys talk about behavioral finance ad nauseum. And I don't want to do that to you. It's what I care about a lot, though. But one of the things that we do is we all are humans and make these natural mistakes. And Danny Kahneman writes about them, or wrote about them before he passed, and would say, by the way, even though I discovered all of these things, me and Amos Tversky, I still make the same mistakes. Just because I know about them doesn't mean I don't still make them. And so I've taken that to heart, and I know I'll make mistakes. I want to document them. And I also want to set up a culture in my firm where it's okay to do that. And maybe, just maybe, we can rewire some of our circuits by having a culture which allows that to happen. Hold your hand up when you screw something up. There'll be as much internal praise as there will be for finding the next big winner. Let's follow Charlie Ellis's losers game prescription a little bit tighter. Let's make sure we lose as little as we can on our losers as we do finding big gains in our winners. And let's try to rewire the condiment diversity prospect theory loss aversion thing. If we can lose less money than we make when we win, well, that's something special. Turns out we do. And I think it's because it's okay to screw up at my place. When I was an analyst at Fidelity, if you find a stock that you liked, the next thing you would do is try to find more information which supported the view you had. You want to look smart to these guys, to these big PMs. Oh, look, I'm right. I found this, I found that. Nah, you already bought the stock. The thing to do now is to go out and make yourself look stupid. Look at this. This totally screws my thesis. So as I've evolved in my career, a lot of what we do is we build shadow models. We write short cases for stocks that we like. We really want to be open. And if you've written that short case, you know what's going to take the stock lower. If it goes lower, then it's okay. And you've seen it. If you've seen it, you're looking for it. You're not going to be blind to it. And it's more likely that you catch some of those big mistakes earlier. And so I'm a big fan of that.
Do you set your own shop up right there? Is it on the heels of this? You got ways to go still.
No. Oh man, I got ways to go. So I'm at Fidelity, working as an analyst. I had an offer to go work for a New York-based hedge fund. And I was very intrigued by the long short side because, especially after the tech bubble, you feel like the hands are kind of tied running the long only shop. I make so much money on the short side here, or on both sides. And so Oxif came calling, and I went to work with them. And I brought one analyst with me who had worked as an associate at Fido, and started working for them, and had a wonderful experience. It wasn't the greatest philosophical marriage between me and them. There's a lot of things about the business which wasn't my style. But it was just a wonderful experience to get to see how that side of the street works. You're used to these big super tanker mutual funds.
It's a huge change from Fidelity. To go from Fido to Oxif in that period had to be
Oxif was much smaller than it ultimately became. It was a $4 or $5 billion place, and only like $500 million or 600 million of it was in Europe. So it was wonderful. But culturally, it wasn't the right fit. And at the time, it's called Man Group. Now it's part of GLG, Man GLG. Man Group said, hey, can you run some money for us externally? And so I spoke to two other guys that had been at Fidelity with me, and we all said, okay, let's do it. We left where we were. We ran this money for the Man Group for a couple of years. And then, so here I'm at Fidelity, I'm at Oxif, I'm working for the Man Group externally. And the culmination of all of that was in 2008, I launched the Alpha Europe funds, which is the precursor to where we are today. But it's been under 3 or 4 different umbrellas. Originally, it was just my group, Dickson Capital Management. And we launched that fund, I think 4 months before the GFC, which was
great market timing.
Not great timing in terms of raising money, but I was very proud. We made money in 2008. We made money in 2000. I know we're running long short, right? So it's obviously not long only. But we didn't have the right kind of investors looking at us. No one really didn't have a brand. And at the time, especially if you were raising money working in T-Bean through Morgan or Goldman, most of the folks you met were these, for the middlemen, these fund of funds. And there's some great guys at some of these places, but just the incentives were all wrong. And the cost structure was all wrong. So we raised a bit of money, but then if we had a bad quarter, it would go.
Yeah.
Well, how can I invest for when I say long-term, I mean 3 years, not like 20. But how can you do that if you might lose all your investors? Right. Or get a call on literally the Tuesday of the week. Hey, how's the month going so far? Dude, started yesterday. That literally would happen. And you can tell yourself you're ignoring it, but are you going to take the right amount of risk when things do go pear-shaped? If you think all your investors are going to ride you like Zorro, no, you won't, even if you tell yourself that you will. So I wanted to sort of build a brand, a better brand. Dickson Capital wasn't quite the brand that was needed. And so fast forward 3 years, we're now getting the late 2011, early 2012. We sold ourselves to Perella Weinberg in New York. Perella at the time had both its asset management business and the boutique investment banking business. And some wonderful people at this place too, particularly in the front office. Guys like Greth Lester and Wilder Harvard. And these guys knew everyone. And I finally got to meet U.S. University Endowment and charitable foundations. That was the money we needed to run. Longer term, deeper thinking, less reactive. And so I got to meet a lot of folks in this sort of marketing process. Perella came in and took over our office. We rebranded the signs on the door. We stayed in the same office. They're on Piccadilly, right across from Green Park, Buckingham Palace on the other side. Wonderful area, but it became Perella Weinberg Capital Europe. We rebranded the funds from Dickson Capital Management, DCM Alpha Europe to PWP Alpha Europe. And we were off to the races. But then things started happening exogenously at Perella, which were not related to us, but one of the other funds kind of lost a lot of their assets, and that started changing the dynamics for everyone at the firm. And before you knew it, you kind of see the end of the story for the asset management business. The boutique investment banking business is fine. They're full of hotshot bankers. They do a great job. But the banking business wasn't going to get to better scale. Sorry, the investment management wasn't going to get to better scale. And so we negotiated a very amicable, friendly separation at the end of 2014. And after I had 6 months of gardening leave, we call it, so you can't talk to investors. We got a commitment to launch our own business. So in 2016, it took about 6 months with the FCA, our version of the SEC, to get all the approval. But we launched the same fund, the Alpha Europe Fund, under this new umbrella, which was called Albert Bridge Capital. That's back in 2016. And Albert Bridge is literally the bridge at the end of my street where I lived in London, on Oakley Street. I lived on the north side, and take the bridge across into Battersea. Most beautiful bridge in the world. Go out there, just stare at that bridge till the lights went out at midnight. But yeah, that was how Alpha Europe started in 2016.
Did you feel like at the onset of Albert Bridge that you finally got, that's a lot of steps to get the firm culture right, and a lot of steps in understanding what the client base had to feel like, the share owners?
Man, I don't feel like I'm there. I still feel like I'm learning it. I think every step we were getting a little bit better. I've even been through another iteration of this Albert Bridge since 2016. But we had a team of analysts, had a big operations staff, again, wonderful people. And yes, always working on culture, always working on getting better in the investment process. Sometimes having to deal with things I didn't want to have to deal with, mostly on the operational side, or maybe human resources issues. I'd rather just pick stocks. But, and we did a decent job building the business over the next few years. We had one of the best years we'd ever had in 2019. Really started to expand things up, and we had a few more analysts. And it was followed up by the literal worst year I ever had in 2020. And we completely screwed the pooch in the first quarter of COVID. Basically, we had just the wrong portfolio. Our portfolio had become a little small capping, which wasn't a good thing. They become more value-y than normal. We're kind of value tilt, but we just saw some silly prices. And so we bought a lot of things that had already been destroyed. So we're anti-momentum. We just ticking all the wrong boxes for a global pandemic. And so had a rough March, rough first quarter to my investors, which I've never done because we're not top-down investors. I don't have a clue where markets are going, interest rates, none of that stuff. And you see these quotes from these macro guys. You should spend all your time on macro because that's what drives things. Yeah, that stuff's unpredictable. The 20% of the markets or of the stock prices move, which is idiosyncratic, that stuff is more predictable than me telling you that you think Japan's going to fall 12% tomorrow or not. So I'm spending 100% of my time focusing on the idiosyncratic, stock-specific, firm-specific things affecting this company or the dynamics of the competition in the sector for that company and try to find the winners and losers. So as where was I, man? What was I talking about?
Talk about the evolution of the firm, the evolution of the strategy after the worst year ever.
So as we do this, I go to my investors on April 1st and I say, guys, I'm not one that has ever said, hey, it's time to invest, except it's time to invest. You guys need to top up. We're seeing these liquidity-driven dislocations across Europe. They're happening all over the world, but we're definitely getting them here in Europe.
Yeah.
And most all of them did, topped up, which was great. And by the end of the year, we had recovered almost all of the drawdown we had in those first 3 months. I was very proud of that. And I think we still lost money that year, but it was just a normal kind of year for a down year. So I was very pleased with all that. What was less comforting was that we lost our largest investor after COVID. And I've kind of telling the story backwards. My wife wanted to move to the States back in 2018, a couple years earlier, and had kind of set her sights on living in Florida near the beach and getting the kids to finish up, with the 3 younger kids to go to school in the States and finish up here. And I said to her at the time, well, what do you want me to do? I mean, the business is here in London. She's like, yeah, you'll figure it out. I said, okay. So I started commuting between Naples, Florida and London, England in 2018. Yeah.
Oh, good time for global travel still. Yeah.
Yeah. Well, and first I tried it every 2 weeks and that just about killed me. And so I changed it to every month. Okay. I'm going to fly to London for a month and I'm going to fly back to Naples for a month, set up an office in Naples, and then carry on in London. And I got it to work. So when I was in London, I was spending time with the team, very intensely, and, going out after work with them. And then, to the extent we had investors or companies we were investing in based in London, spending a lot of time there. And then when I was in Florida, it became a lot more of the deep work, was a little less trade intensive, a lot more reading and writing, but the stuff you need to do, especially when you're trying to find those next ideas. And for the kids, it was ironically, a positive for them, which is going to sound strange, but my normal schedule when we were all in London was to get up really early and go to work and work late and come home and never see them. And on the weekends, I'd set up a Nerf hoop inside the office so my boys could come in and shoot baskets while I worked. My baby girl wasn't old enough to do that. And then Sundays was we go play soccer somewhere, where that was the extent of my family involvement. When I came to this sort of Naples, London schedule, when I was in London, I just made sure I'm doing the Zoom calls. After COVID, the Zoom call started, but even before then, doing homework at the certain times of night and stuff, and trying to work the time difference out. But when I was in Naples itself, it was wonderful because I could get up at 2:30 or 3, like I did this morning, work the European market hours.
Yeah.
And maybe at 7:30, pop in the house, take the kids to school. And then markets close 11:30, do a little more of my writing and stuff. And at 3:30, pick them up from school or go to their soccer game as long as I crash by 9 or 10, I'm cool. And ended up getting a lot more time in in that half year I would be in with them in Naples. I've had more time with them than I had the full year in London. So that worked. 2018, 2019, COVID hits, and we're already used to kind of running a business remotely half the time because I had been doing that. So it wasn't a big shock to us. And the ops team handled things well. Everything was already kind of in the cloud as it were anyway. So there wasn't a big, operationally, not a big change for us in terms of how to manage the business. But I was already spending half my time in the States. I ultimately wanted to relocate here and get this SEC registered to do that. And I was like, boy, now that I've lost this big investor, I think we were running $400 million, man, over half of it was this one investor. Yeah. And another one of our investors was a public pension plan that had to follow what's called ERISA rules. And one of the ERISA rules is you're not allowed to be bigger than 20% of the total assets of the firm.
Yeah.
When I lose that one investor, I have to force redeem the second largest investor. And so I'm like, okay, I could be very negative about this, or I can spin this internally as a positive. This is perfect. Let's wind things down to London. And when the timing's right, we'll resort things under this new umbrella in the US. So we did that. We wound our London fund down, gave back our money, or their money, at the end of 2020, and then launched Albert Bridge, USA, last year.
When's the writing start? When's I know you're writing a long time. I know your wife and maybe the kids when they're banging balls off Nerf hoops or hearing the tap, tap, tap at the keyboard. When's that start in earnest?
Yeah, that's a good question. I had always written a lot of things internally going back to the Man Group days in the early days of Dickson Capital. But it was sort of a cathartic exercise for me, but I also thought it was important to document our views about companies and why we like them so we could go back and reread them 6 months or 1 year, 2 years later. Has something drifted? Has our thesis drifted? Why do we still own this thing that we wrote about? These were the reasons why we bought it. And are they the same as the reasons we own it now? Or are we trying to convince ourselves that this is still a good idea or that this isn't? And so I wanted to have a nice database of things. And sometimes I would go off piece and write about other things, more behavioral finance stuff, decision-making, how markets work. And ultimately I started sharing more and more of that with our investors, the stuff I would write. Very few people are reading it at the time. I'm just enjoying writing, but getting maybe a little bit better at it. And I had been long following things that others had written, like our good friend Ben at Epsilon Theory at the time. And Cliff Astis at AQR was writing a lot of great stuff. It was more on the academic side about factor risks and what was driving the behavior of things. And he famously was one of Eugene Fama. I mean, everyone knows about him being Cliff Astis at AQR, but he was also basically Gene Fama, who was the king of the school at University of Chicago, got to pick the smartest guy to come in, or gal, to come in and be their teaching assistant. And in 1991, that smartest guy was Cliff Astis. By the time I got there, that smartest guy was Tuomo de Voltinaho. And after that, it was Chris Malloy. And all these guys are rock stars in their own right. But even today, Gene will say that Cliff was the best TA he ever had. And he's wonderfully bright. I liked reading him. And I also wanted to copy he wrote a blog, put on his website. He called it Cliff's Perspectives. I'm going to do the same stuff. I'm going to call it Drew's Views. And I told Cliff, I'm stealing.
You win for rhyming. You win.
I think I win. I told him that.
All the English students out there in the world are going, Drew's Views. Way better.
Rolls off the tongue. So, hey, Cole, I've got this Cole. Sorry, Matt, interrupted here.
All good.
You want to make on Matt's got he's got a podcast like 1 million people watch. Like, you want to go on TV? See ya. All right, you can edit that part.
We'll fix it up.
Yeah. So I started putting it all in a blog, and the stuff I was writing in it, and became more regimented about it. Started the Twitter account back in 2018, to try to popularize it, just to get people to sort of focus on it. And it's been amazing. The feedback, not only that, also just the people I've met and become closer to. And it happened on Twitter, now called X. People that we kind of knew each other, but then we became closer, or random people that we didn't know each other at all. And all of a sudden, like Jason Zweig or Ben Hunt, or Wes Gray or Ryan Kruger or the other folks that you've interviewed, it's like, they become some of my very good friends, which is a weird thing to happen to a guy in his 50s, meeting a bunch of new people, and they're all smarter than me, and it makes you smarter, and it's fun. And so there you go.
This idea of like re-surrounding yourself with smart people, it's kind of wild. And especially just hearing you say it this way. It's like you were out of the classroom, you're out of this thing, you're in this next phase of life, and you were like, I need to refine the smart people again.
Yeah.
I was waiting for you online in your 50s. That's kind of a crazy thought, right?
I didn't know what was going to happen. It just kind of did. And like, oh yeah, this is great. So yeah, that's been wonderful. And I enjoy writing. And when the mood strikes, I used to try to do one every couple of weeks. Now it's just when the mood strikes me, I hit us right about this. And I think it helps people. I hope it does. Certainly helps me to just get my thoughts down. And as I mentioned, I like to do it. And as you know, one time I went very off piece and talked about an issue that had nothing to do with finance, and that thing exploded and maybe changed the world a little bit. So it's been a net positive for me.
It's important. And this is part of why at the beginning, I asked the question about who you read growing up, because and I like to think it's the culmination of the behavioral insights, of the rigor, of the civility, of the sense of fairness. You wrestled with something really raw and you put it together. So we're talking about the stay in the game piece. And if you haven't read the stay in the game piece, I mean, maybe you didn't make it this long in the interview yet, but if you have, I want to give a shout out. I don't think Chica's in the background anymore. We did have a Chica appearance at one point.
It's raining outside, so she's hiding from the thunder. She's right here, my baby.
Yeah. What do you hope, writing this down for yourself, do you think at all about what this means, like for legacy, like all this? Maybe the kids don't care about your stock piece from 1998 or something, but do you think about legacy with what you're writing at all?
Yeah, I do, and maybe that's egotistical. Even on the finance stuff, I have had a few offers, like Craig at Harriman House, who published everybody's book. He came by and said, "Hey, you want to write something?" I'm like, "I'd love to. I just haven't gotten around to it yet." But when I do write, it's with a thought of just make sure this is just yourself. You're speaking, and I like to write almost as if I speak. And I don't want to use words that are too big. I try to keep things chill and just tell a good story. So it's interesting. And then one day, maybe I'll put a compendium together of everything. But as it relates to the stay in the game post, that was something completely different. That one just kind of wrote itself. And I don't think I'm ever going to write something which tops that in terms of the impact it's had. That's going to be tough.
Well, if there's one thing I know, it's that you don't have to write to top yourself, but you have to write to seek that thing that writes itself coming out of you. Whatever that is, that's the interesting stuff. Whatever that is, that's the interesting stuff. I can talk to you for days. I got notes. I want to review some of these things I wrote down. I want you to reflect on these as we go a little bit, because talk about a journey just from, staying in the game, the world's least focused student, self-declared. There's a through line in this to these Asimov books. I'm curious if you ever thought about this. I mean, your dad teaching you logic, teaching you civility, teaching you these like early puzzles. You're a sci-fi kid through and through. You love isolating a variable and like changing the whole world around it to see what happens.
Maybe. Yeah, maybe that's it.
Have you
Maybe
revisited?
that's it.
Have you revisited any of those Asimov books? Have you gone back?
I haven't. I did back in my Atlanta days. I told you about my boss, Ashley, and he knew what I was interested in, and he had similar pursuits. And we got to go hang out with Carl Sagan, which was wonderful.
Oh my God, it's
And there's a
amazing.
lesser known scientist who might be the smartest guy there ever was. Professor at Indiana University, he wrote a book, Gödel, Escher, Bach, The Eternal Golden Braid, Douglas Hofstadter.
Got it right back there.
I got to hang out with Douglas bloody Hofstadter.
Seriously,
Yeah.
you
Yeah,
can't
that
drop
was-
this on me now, Drew.
I know. So that was, I mean, I think of all books, I think that book took me, I kid you not, 2.5 years to read properly. And that was trying. That was reading and rereading and rereading, going through the EMU puzzle over and over again, trying to understand. And he wrote this thing when he was like 25,
Oh, and
Pulitzer Prize winning book. I mean, just the brain size of this man. Yeah, so I got to meet Douglas Hofstadter, and I got to meet Carl Sagan, and I got to meet Eugene Fama and Richard Thaler at school and spend time with, especially with Dick, who's a great friend to this day and a wonderful, also bad golfer. But so I've been very lucky with all that.
I want to see a copy at some point of the Prime Timer. I know it's out there somewhere.
Oh yeah, there is one. Yeah,
I want to see an image. You need to post it on Twitter, post it on X. Yeah. When you went back to history, and this was another sort of Asimov comment I made for myself, just the idea of just being 2/3 right, meaning you have to be 1/3 wrong, and kind of looking for things to be right about and wrong about. The joy of finding mistakes, the joy of finding your heretical economists, the joy of discovering options, which is just the ultimate combination of math and sports in that office, so that your dad can look at you after you said, I think he overpaid for this, and him going, why poli-sci?
Why,
Young Drew? Why are you doing this? I want to see at some point, if we're ever in a bar together, I'm challenging you to, your Flying Lotus party trick of data entry on the keyboard. We'll see if my one-time part-time teller skills can match your Lotus data entry skills.
I do challenge you, man. It's going to be tough for you to even get close to competing because it's ridiculous.
We're going to get the clocks out. We're going to get the clocks out. We're going to get the chess clocks out and challenge this. The concept of, and I encourage people to go back and listen to this part again. I know I'm excited to hear this again. Just your dad getting the job as the Supreme Court justice in the state of Indiana and becoming the longest serving justice since 1816, I think you said, which is just remarkable. But the family decision of how to do that, I'm really interested in your dad. I hope if you're going to write something else, I want more dad stories, because your dad then introducing you. This Frank Capozza story, when introducing you to Frank, going to New York, this hedging the basis trades from grain and applying it to oil, and that whole period, and going to Atlanta. I mean, meeting Lorella, meeting your wife in this period, but just these little subtle directional nods from your dad are just absolutely stunning. Richard Thaler, going to University of Chicago, like just being there to learn that dissent is okay. Yes. Deliberately seeking dissent is another incredible theme of your journey.
Yeah. No, and especially in this day and age, Matt, when usually that dissent degrades into these sort of personal attacks about anything, whether it's political or not. But to watch Gene and Dick, or to watch my dad and his other four Supreme Court justices on the court, gosh, you would think they want to kill each other when they're in the middle of battle. But then it's time for lunch, or then it's time for a beer or a glass of wine or a round of golf. And I love that. I absolutely love that civility and that ability to explore, debate. And even if you vehemently disagree with each other, that doesn't mean anything more than that. And I really want to strive to emulate my dad, to emulate Dick and Gene in that process.
I'm envious. I mean, as a Phillies fan, I'm not envious as a Braves fan, but the fact that you were there for Braves in the early 90s and then University of Chicago in the late 90s, in that dissenting too, you and Thaler getting to research bubbles together in that period, that's wild, because there's the market basically telling you you're wrong, behaviorally, something really interesting is happening.
Well, something's going on, right? Yeah.
Something is amiss, but that realization, and I think this is going to take me right into just where I want to kind of like land this, that realization of start spending time with just really smart people. That's what happens to the least focused student. The least focused student is going, no offense to the middle school math teacher, or whoever wasn't putting up at the Thaler level, let's start putting the time in with these people, because the Fidelity journey to the Oxif chapter to the next piece, the 2016 finally founding Albert Bridge Capital, to chasing culture inside of the firm and culture with clients, and then even starting to write and share in the firm, then outside the firm, and to putting it on Twitter and figuring out Drew's views, still the best name. This is you going, I'm the least focused student, but I'm the best friend maker I can be. I'm the best culture builder I can be. I'm the best relationship seeker. Holy crap, you've had more things turn over in your professional business and losing clients and all the ups and downs. That's profoundly important. But what gets you through all those things? Relationships. And
you got to stay in the game. It's having that mentality, whether it's my son or it's me, or it's any of us. You got to stay in the game.
Keep staying in the game.
Especially if you love the game.
It helps if you love the game quite a bit. But what's not to love, right?
What's not to love?
Drew Dickson, you're truly an intentional investor. Tell the people where they can find you, follow more of your work. Where can they find you out there?
Oh, I should be prepared for this answer, Matt. I've got Drew's Views blog site on our website, which is albertbridgecapital.com. I've got a Twitter account at albertbridgecap, I believe, where I have random comments about markets and sometimes sports, sometimes music, as Matt mentioned. Big fan of the 90s, if you wanted to know. Big fan of college basketball, big fan of now English soccer, or football as we call it over there. Didn't know a thing about it when I moved there. Couldn't tell you anything, but we lived near Chelsea's stadium, Stamford Bridge. My 3 youngest were born a half a mile away. The twins played for Chelsea's development program. And we'd see Didier Drogba, Matt, on the streets, or Frank Lampard or John Terry, just walking the street.
Just hanging out. My
daughter literally trick-or-treated with Frank Lampard. He lived in the neighborhood next to us.
Amazing.
So we are Chelsea fans through and through, and I fell in love with the game. It took me a few years. I thought it was just for sissies and wimps when I was in Indiana playing soccer.
Then you saw it live.
You go to England, you see the real deal, and it was wonderful. And I'm very excited that my boys have the passion, as my daughter does. They're all going to play Division I soccer. I'm sure of it. And we'll see. Still a long time to go, especially for my little one. But yeah, we've been on a journey. We're still on a journey, Matt. We're still on it.
It's the game. Just got to stay in it, right?
That's it.
Thanks for joining me today, Drew.
I enjoyed it, Matt. Take care, buddy. And hi to Ben and Rusty.
Send your regards.
All right.
Thanks for tuning in. Be sure to like, share, and subscribe wherever you're watching The Intentional Investor so more people can find our show. You can follow Matt directly at cultishcreative.com or at cultishcreative on Twitter. For more great content at the intersection of investing and life, check out epsilontheory.com or at epsilontheory on Twitter.